You're like, what the heck? Why am I only getting 10%? Hey, welcome to the Guaranteed Retirement Guy Show. My name is John Stevenson, and I'm going to talk to you about the disadvantages of annuities. Yep, that's right. I sell annuities and I make commissions based off of the sale of annuities. And so why would I talk to you about the disadvantages? Well, because annuities aren't for everyone, okay? Let's talk about the disadvantages, okay? Why would you not want to purchase an annuity? Okay, and then I'll go over quick the pros right afterwards. You know, we gotta make this balanced, make sure I argue the other side. But here are the disadvantages. Okay, well, disadvantages is, well, you might have a surrender charge. In fact, you pretty much do have a surrender charge depending on the type of annuity that you buy. Okay, so if it's a variable, a lot of times their surrender charges are much lower, but then you got a lot of fluctuations and a ton of fees. So disadvantage of just like a regular annuity, like a fixed annuity or a fixed index annuity is, yeah, you have a surrender charge period of like 7 to 10 years for a fixed index annuity, you know, where the company will actually charge you to cancel or surrender your policy. Now, a lot of times they'll have a 10% free withdrawal privilege. You can take that, you can take up to that amount without any surrender charges. But again, companies will charge surrender charges because they're gonna lose money if you take it out early, because they got to liquidate their positions that they put in place in favor of you. And if you take it out too early, they will lose and they have to pass it on to you. So that's the downside, is you have those surrender charges. They go down over time. Usually they'll start around 8 to 10% in the beginning, and they'll eventually go down to 0 after the end of that term. That's definitely a downside. So if you don't have a lot of liquidity, you know, maybe you got $100,000 and you want to put all of it into an annuity, it probably wouldn't be the right thing for you because you need liquidity. If you put all of that in there and you need some of that money, then you're going to be charged, and you don't want to be in a position like that. So whenever you purchase an annuity, and companies, insurance companies, and I will talk to you about this, you have to make sure that it's under a certain threshold, usually like 30 to 50% of your total assets, sometimes up to 75% if you really need the income and you kind of have no choice. But again, what we try to do is we want to make sure that there is as much liquid outside of that annuity as possible to basically minimize or reduce or eliminate that disadvantage. All right, so here's another disadvantage. Fixed index annuities do not earn as much as the index. Why not? For instance, if it's following the S&P index, and let's say the S&P does 15%, and then you notice your statement for your index annuity, they only gave you 10. You're like, what the heck? Why am I only getting 10%? It's because they got a cap, okay? Well, why are they capping me? They're capping me at 10? Why can't I get the full amount? Well, because when the market takes a dive, you're not going to lose a dime. And so they have to make up for the cost of providing you that security. And how do they do that? Well, they're purchasing call options. And guess what? They're purchasing them in bulk, often for billions of dollars. And the bad years where the market dives, they can't even exercise those options. So they lose billions of dollars during the bad years in your favor. You're not losing. Okay, that is how they're able to stay solvent, because they need the money to continually buy options to provide you your guarantees against market fluctuations going down against you, and also guarantees if you've got an income rider and you want high guaranteed income for the rest of your life. Okay, so there are reasons for these downsides. But if you're someone who's like, I want growth, and I do not want to be stopped if the market is going up, I want all of it, then you shouldn't be in an annuity. Put it all in the stock market. If you do that, of course, you're taking on all that risk. But if that's the kind of person you are and you love risk, nothing wrong with that. Annuities are for people who want guarantees in their portfolio. And they're like, I've had my growth years, now I want income. And you don't have to use all of your account, just use part of it. Just use only the amount that you need for income and no more. It's really that simple. So another downside. Well, let's see. You could say it's a downside that some of the policies do pay high commissions, right? I mean, you're not paying that. The insurance company's paying it, okay? And some of them are very low commissions, okay? Some are only paying out 1% or less. Some of them are paying like 7 or 8. So there's just a lot of factors in play, but remember, you're not paying it, okay? But a lot of people see that as a downside, especially if you're working with a fee-only advisor. That fee-only advisor will sell you an annuity and charge you a fee for it. So you might be thinking you're getting a certain rate, but your actual yield is lower because you're paying a fee to get it, right? So you have to subtract the fee that advisor is charging you from your overall yield over here. So usually it's better to work with someone like me who is commission-based so that your yield is 100%. Don't work with them, work with me, okay? There are downsides, there are upsides to every type of investment, okay? Annuities, stocks have their upsides and downsides, literally. But I mean, even real estate's great, right? But man, I've had rentals and they wear you down. And especially when you got renters that say something and do something else and you got to clean up after them. I've had that. Super frustrating. I mean, you get to a point where you're like, I've had my growth, I've had my fun. I want to travel, I want to do things with my family. I don't want to deal with that. I want my pension income. And so I'm going to buy annuities and provide that so I can focus on other things that are more important. Okay? So it just depends on your stage of life and what you're looking to accomplish. I hope that really helps. I wanted to just share some disadvantages because they are real. And there are disadvantages, but really, they can also provide so much as far as advantages for your retirement. And if you're looking for someone who wants to show you everything, regardless of what he's getting paid, who's a certified financial fiduciary, then you found him. Okay, there is a link below this video. You can book a call with me and we'll chat about your current situation. We'll see what you're looking for. And if you want me to help you purchase an annuity, then I would love for you to book a call with me so that I can show you everything that's available to you and help you make the best decision for you, not me. So if this video has brought any value to you, I hope that you will like and subscribe. And I really appreciate you watching. So thanks again, and we'll see you next time. Hey, I really appreciate you watching the video today. If any of it makes sense to you, or if you found value, or if you even got a question about anything, I hope that you'll go to the comments section and ask it. There's no stupid question, and I'm looking forward to hearing from you.